The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time, right now in fact. And great programming all the way through. Let's hope that being, what is this today? Wednesday, that we will continue that whole thing. Wednesday, of course, we have Daryl coming straight after me. You got, I always get this wrong. Let's see. So 12 o'clock, Wednesday is Daryl. 1 o'clock, Steve Rose. 2 o'clock, Dave White. 3 o'clock till 5, Tom O'Brien. What more could you want? We've got the Dow up 154 at 17,722. Did I say that December, I see to subscribers, December is going to be a really whippy month? And I think we can look at this. Look at this chart of the E-minis. Look at that. Green, big green. No, big red, big red, big green, big red, big red, big green. I mean, whippy is the name of the game. Dow's up 152 at 17,720. S&P's up 10. You've got DuPont, Dow and DuPont merger talks, DuPont sorta and on the news. Interesting chart. I've been looking at this for some time now because I was not surprised that there was some kind of announcement. And one of the reasons is when you have this very slow arching formation that doesn't garner energy to the downside, yet the technicals are spiraling to the downside, it doesn't take much to have a sudden pop to the upside to break above E. Absolutely, did I expect anything like this? Not at all. But I was not surprised that there was something to say that this pattern here, and that's the reason why in the Dow chart, look at the Dow chart, remember the rectangle formation? Stuck in a rectangle formation, narrow and narrow, with a little one arch, second arch. Actually, you can even call this the third arch forming right now. You've got to expect that 200-period exponential moving average of this orangey colored line at 17,400. That's like a magnet, but it's also a propeller. It's like a trampoline. Every time it gets close, price bounces, and the Dow is getting closer and closer to breaking it to the downside. But here again, you've got the technicals pulling back, but the price is held firm. So the trading band between 17,900 and 17,400 it's locked in for a while. Remember, rectangle formations can last a lot longer than your patience. Let's get back to our story. So that's so DuPont is really adding to the Dow. Let's see. And then after 2 down days, very sharp down days, what I said to subscribers, every time we've had these 2 big black candles, you can expect a sharp move to the upside. Not only that, yesterday, oh, this is really interesting. Yesterday, we had the Trin gauge, Chapman wave Trin gauge, it went to 2.56, which suggested that within 2 days, we already had it intraday yesterday, but it said that within 2 days, there should be a sharp move to the upside. And now I've got a signal that says that regardless of where we close, there should be some kind of a pullback early tomorrow morning in the Dow to go negative. Isn't that interesting, huh? Okay. Let's continue now. Get out of this chart right here. And I want to go to the IWM quickly. We'll go to the IWM. Look at the IWM. It's trading 115. A lousy chart. I mean, the Russell 2000, I thought would play catch up. And have a decent December into January, because that very often happens with small caps. Lousy action, matching very much the New York Stock Exchange. There it is, New York Stock Exchange. Not as bad, but still not good. Now let's go to something else. Move this away. Monthly chart. See the IWM monthly chart. I believe, and I'll be discussing this a great deal in my webinar coming up tomorrow night, but also I'll discuss a little bit of it tonight when I'm speaking at the Investors Business Daily meetup at MIT. It's over at it's building. Actually, I'll just give some information now because I know some of you had asked about it. We've got just a ton of tigers out there that just love to participate in whatever is going on with TFNN. So let me just give you that information if I can find it, of course, right there. Formerly the Boston Investors Business Daily Meet. Oh, it is. It's the Boston Investors Business. What is it called? It's called the Boston Investors Business Daily Meetup Group. And it's at MIT Building E51, room 335, 70 Memorial Drive, Cambridge, Mass. You can just Google it and find out. And it's 7 o'clock tonight, December the 7th. I'll be Wednesday, and it's a corner of Wadsworth and Amherst off Memorial Drive, Kendall Square. So I just thought I'd get that out of the way. And I'm going to be discussing a number of things. I also like to answer questions that I don't normally get. They're kind of a different crowd, so it's going to be very interesting. So you see the New York Stock Exchange, it really doesn't look all that good. And what I'm going to be discussing tomorrow night in my webinar, there's still time. I'd say that the month of December, especially the middle of part of December, is going to be absolutely critical. Why is it going to be critical? You can see gold is not acting all that well here, but it really is trying to come off the bottom. And my suspicion is that as the dollar, let's go right there now. So as the dollar, DXY, is doing I got a couple of emails, yes, a whole bunch of people, and agreed. Mitch, that is the dreaded H. And at 87.59, if we break under it today or tomorrow, we've taken out the left side low support, and then a whole bunch of criteria come to be. But my thinking here is that the dollar is under some kind of consolidation phase right now. And because of that, I think that there's a chance that gold doesn't have to have a spectacular move, but gold could have a pretty nice bounce here, the gold stocks in particular. That's my thinking, and that's kind of what we're looking for in my opening call. But there are other things going on, and the commodity index is still under pressure, and that is dollar TRCCI. That's the Reuters equal weight commodity index. You can see that the downtrend, the technicals are still, let me move this away. The downtrend technicals are still very negative. And when I'm looking at the weekly chart at 3%, it says that there's just a lot of, there's just a lot going on here that is not all that positive. There can be a balance, absolutely. And that's kind of what I'm looking for. All right. Now let's go to a couple of things that I want you to do here. So that's it. I want you to look at gold. See, gold now is down 5 or 6 points at 1069. It was up about 8 points earlier. It's coming off this bottom here. That's the low from the 3rd of December at 1045.40. My thinking is, I keep hearing this crackling sound. I'm not happy about that. I don't know what it is. When I'm looking at this, it seems to me that we're forming some kind of the failure of a single leg A up will unfold if in fact gold takes out 1062. It's at 1069 right now. My thinking is it's going to start to form a little bit of a base here, and then what we'll be looking for. Remember what I drew in the weekly chart? I drew the arch formation, and that's kind of what we're going to be looking at here, the arch formation. That's that, and I want you to look at high-grade copper, see what it's doing. High-grade copper. Yeah, it's trying to rally. It's also trying to get off the ground. So all I'm looking at here is that there's some kind of a basing formation that's unfolding right now in the daily charts. The weekly charts are just starting to show a little bit of sign of strength to say, hey, if we're looking at left side, right side price time matches, copper broke in the monthly chart, broke an uptrend line. It broke the 200 period exponential moving average. It's trying to form a base. The stochastic in the monthly is at 9%, trying to turn around. The on-balance volume is turning. MACD is still quite negative. It's just declining with the The green line, the fast-moving average, that's the 9-period differential, still under the slow-moving average, the red line. So I don't see all that much here. And if anything does happen, it could happen really, really suddenly. A week from tomorrow will be, is it Wednesday or Thursday? I think it's Thursday. What is today? The 8th? Today's the 9th. Oh, so it's maybe Wednesday. So maybe, I am confused. Anyway, next week sometime the Fed makes an announcement, and we're going to be watching this real closely. Because as far as the inflation is concerned, pressure, other than just purely technical, the deflationary pressure is extant. It is just everywhere. Everywhere you look. Wednesday, 2 p.m. Thank you, Dave. Dave White, always right there. And Wednesday, 2 p.m., we'll get some information. But now let's do this because it's really important. Let's look at the TLT. And while I'm looking at the TLT as it comes up here, I want to go to this chart here to show you something very interesting. The TLT trading at 120.83 is down 90 cents. But look what's happening here. You see this line that I drew ages ago? It's kind of wide right now. I'm going to narrow this because I want you to see something that's really interesting. Look, this is the triple yield chart. And in that triple yield chart, what we're looking at is this cluster formation back in June of 2007, where the 30-year T-bond yield was at 54.08. It went all the way down to 22.26, and that was when? That was right there, January of 2015. It had crossed that line that I drew in just to show you that with all the talk that's going on, even the talk of rising interest rates, the rate itself has been here umpteen times since it broke down back in 2008, November of 2008. I could raise this a little bit and go a little bit back, but what's the point? The point is that this is like a fulcrum level for the whole bunch of these guys. And the 5-year T, the 10-year T note, now it is the 5-year T note went to 5.41. It's now at 16.88. That is a really big move on the 5-year. And the 10-year has gone from 13.94 as recently as 2012 to where it is now at 22. So there again, very big move. What is that? It's 22, yeah, that's about a 78% increase. Now, if that's the case, you've only seen in the 30-year T-bond note 22.26 to the recent high of 32.55, and now it's at 30. So that has not seen the same kind of, 10 points is a 30% gain, but the fact is, it hasn't been, the 10-year did not come down as sharply. It's been holding quite steady. And this basically is saying, we're anticipating something in the Fed. And I want to talk about that in a moment. Is the Fed doing the right thing at the wrong time, the wrong thing at the right time, or the wrong thing at the wrong time? Hey, I already got confused. I'll be back straight after this message.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back. So just a real quick thing here on the Fed. The Fed, first of all, my impression always has been that it is better for the Fed just to act without ever talking, just to do the job. Regardless of whether it's right or wrong, that they should be completely independent. They should not be putting out messages that they get all this feedback, positive or negative, whatever it is, because there's no way you can't be influenced in some way or the other. They should just do what they have to do, and then everybody deals with it, and then the repercussions will just fall wherever they fall. That's number one. Number two is, within the context of this openness, what if they raise the rate and then, and I'm looking at this via different mediums, and I'll be talking about that tomorrow night, sector stocks, whatever it is. Oh, and let me just tell you, I don't know about you, maybe someone will tell me whether it's happening to them. I am just getting inundated by hotels with special offers. Of course, most of them want you to use a card, their card, but unbelievable. It's like every day, special, congratulations. And they are going crazy, the hotels. And if you look at the charts are saying, I'll do that now because one, I'm thinking about it. Look, this is Hyatt. Hyatt, oh, looks terrible. This is Hilton. Hilton, oh, it looks terrible. This is Marriott. Whoa, look at that. Peak F top way back in February or March. In March at 85 round number high. and now it's trading at 69. Not good. And one other hot one? Was it HTT? Yeah, Starwood. Look at that, also made a peak, and now it's way down. So I'm looking at this, I'm saying, gee, something's going on here. Definitely something's going on, all right? That's economically there's a lot of pressure. So what if the Fed makes this move and then they start talking, and the market starts to go down, as I think it will in January. It might be earlier than that, but let's just say January. And all of a sudden, they start to get a little nervous. And then what are they going to say? We're going to lower the rate again? No. Or what if they say we aren't going to do anything for a while? Well, maybe doing nothing's fine. But now you've already bumped that rate up. Now, 0.25%, these things can wiggle 0.25 at any stage. Any of these wiggles is more than 0.25. So this is a very interesting period. And it's a pity that we have to say interesting, because I don't know how constructive it is at this particular point. But there's that line, there's that barrier. And it says to me that in the next 2 weeks, if the 30-year trades above 31.40, if the 10-year, the 10-year trades above 23.77, no, closes. I meant to say close. If it closes above, and in this case it closes about 23.77, and the 5-year closes above 17.80, that's going to suggest there is a trend change, and that for the first time will suggest that the TLT, now I'm back to the TLT, see, I've made a full circle, is going to start to come down sharply, and that major, I'll be talking about this tomorrow night, this major up channel is going to see, right, we're so close now to the support, the Chapman wave inside track. We're going to see whether or not it starts to break and whether rates are going to start to climb. I just don't know why the rates would climb. I think there is so much pressure everywhere in commodities, just everywhere. And that's why this month and the next week and a half is so critical. Because if all of a sudden you see crude oil, let me get out of this, sorry, let me just move this away. If you see crude oil, USO, start to push much higher, if it actually has a rally, and instead of being at 1170 on the USO, you start to see 1220s, then 1250s, then 1280s, and all of a sudden you're at the 1350 level, turning the 1280s into support. Then I'm going to say to you, you know what? We could be looking at the dollar pulling back and having a reflex action for gold and the commodities, and finally you get a decent bounce of maybe 3 weeks, maybe 5 weeks in the commodities. That's really the way I have to look at it. And there are parameters that I'm going to give subscribers exactly where I think you can look. Now, let me go to this. There's a couple of questions I need to get to. RSX is the Russia Market Vectors Index. Doesn't look good. Let me just read. What is it? Hello, Basil. I bought 25 puts for RSX yesterday. Stock price was at 1561. All right, it's at 1550 right now. That was when the puts were purchased. My target exit price is 1439. Can you examine this one today in your show if you have time? Thanks and have a great day. Dana, Clearwater. Yep, Dana, I will. And two things are going on right now. The trend is in the monthly chart is very poor. I'll be right back when we talk about it.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So let me just talk about this real quickly because I just wanted to say that I did a little some work here on the RSX, which is trading at 1553. What's interesting, I grabbed this just because I'm trying my best to use this as much as possible these days, if I remember. This is my Chapman Wave market tool that I developed, which has the support and resistance levels. So support is at 1521. The low was, in fact, 1518. So it took it out by a few pennies and then it bounced up. I think everything I'm looking at here suggests that it should be going much lower. You've got the puts. You didn't tell me which puts. You didn't tell me what month. If it's just December, that's a real quick trade. You've got a week to go. And I think that the way I'm looking at it right now is that there could be a little bit more of a bounce because the on-balance volume at 7.35 is trying to turn and the stochastic is, but my thinking is going to flatten out. You want to see this take out yesterday's low. The moment it takes out yesterday's low of 1518, it breaks that support. 1504 is next, 1445 is the next support. So I think you're correct based on my weekly chart, monthly chart, and the daily. These pop-ups can sometimes, I don't have to tell you, they can be quite severe. So timing-wise, it would have been a day before would have been a better entry point. So you got it, I mean, after really a sharp move down already, you've got to anticipate 1604 is a possible bounce, but I think you're absolutely correct. I think it's going to go to lower lows. Next question was, let me try to go in sequence. The comp index, so COMPX. Yeah, the comp index is a little different. to the QQQ. Yeah, I've got an alternate count F/B at 115.75 on the December the 2nd in the QQQ. In the comp index, it's the same date. The patterns are pretty much the same. I don't have the daily notated. I can just tell you this: the comp index of 5,096. It needs by Monday at the latest to be testing the candle of the 7th at 51.39. If it can't do that, and if it takes out yesterday's low of 5,045, the comp index down 27 right now at 5,070. Let me look at this. Yeah, the IBB is acting very poorly. It's at 327. We finally added to our short position on that one yesterday. Now, I'm looking at this and I'm saying comp index weekly chart is still looking very good at this particular point. And that's why I'm saying we could go all the way into the end of December, just chopping around, trying to make, maybe this is Elliott wave, a triangle, a flat in the form of a triangle. This is going to be very interesting. But if you're looking at the daily, there should be enough strength just to make nominal new highs. I'm not expecting anything other than nominal new highs if we go to all-time highs in this phase. I don't expect it then to continue. Then I think a big pause. We're in a phase where a lot of stocks are really hurting. So that's the comp index. And my daily has 4,996 as major support and 5,150 to 60 as very strong resistance. All right, now let's get back to our story. So that's that. Then I was asked about Apple. Let me see who asked me about Apple. Whoops. Oh, Adam. All right. So Apple, the question is this a candidate to short? Let me go. In the holiday season, I just don't think that you're going to get that much out of shorting. Will it go down? Is it making an arch formation? Yeah, it is. But it is still stuck in a range between 114 and 119, and it's trading now at 116.74, down $1.49. I would, if you are thinking of Apple as coming down, I would rather be looking at a January put. You got the third Friday of January. That gives you time. I'd even be looking at February. Means that you're going to have to be paying more, but I think you've got a greater chance that by January or February, Apple's testing 107 to 105. And that's kind of the way I'd look at it. Upside in the shorter term, 119. Maybe it breaks and goes to 121s. I don't think it's going to go to a new recovery high above that peak E on the 4th of November at 123.82. So that's the way I'm looking at that. So now this is very interesting. The Dow's only up 74. S&P is now unch. One of the things why I said to subscribers, I'm trying to stay light on the long side, other than a sector that I like. Mostly we're in the short side. And because of it, I really think that what we're looking at here is, question here. What we're looking at is this pattern. It is a formidable pattern. It's the perfect case of the right shoulder failure. Let me do it if I can on this chart here. You've had it once in the Dow, which made a high of 17,977. Giving a talk tonight is not exactly the time to lose your voice, and having a webinar tomorrow. So let me just get that frog out the way. There it is. These arch formations, when they start to make the M, that M is really important. That is the second arch. Because if it starts to take out the left side low, in this case 17,425, immediately you got to think 17,210 is really critical, because if you take that out, you don't have support until you go all the way down to 16,887. That's why this range has been, rectangle formations can last a lot longer than your patience. We're still in the range. So when we wrap up today, I'll go to that and I'll talk about the ranges. Meantime, I had a couple of questions in the den and I want to get to them. EEM looks exactly like the Russian chart right now. It just does not look very good. And I don't see anything yet to say, other than another bounce from 32.94 down a penny, it could bounce to the 36 area. I don't see anything more than H, the lowercase h becoming a lowercase m. So I just don't see it. And the question was, EWI, which is Italy. My good friend, I think, is still in Italy right now. And they love, well, he's Italian. So 1, 2, 3, 4, 5. So the EWI, Italy, gosh, I have these all notated. What, am I going to do this again? ABC, 1807, 1809, yep. So that's a D perfect. Yeah. Folks, this is just a fantastic example of this particular technique. Within the Chapman wave, what we look for is the lowest, most obvious low bar, and then we merely count each successively higher peak. What's the objective? The objective is to get you to a peak D. If at that peak D, you've already come into contact with a moving average, a left side high of exactly the same price, anything that connotates some kind of resistance area, you've got to take it very seriously. And lo and behold, the iShares Italy capped ETF is right there at 1844 in June of 2014. It hits the 200 period exponential moving average and it goes plop to the downside. Here's the pattern that I keep talking about over and over. It is the lowercase h that has the potential, just like the dollar index, just like most of the things we're looking at, it has the potential to break down. And there it is. So now we're looking at Italy, not that good. And I could run, look, EWU. One of the reasons why I think that there's upside, very limited upside, that is the UK ETF. But I'd rather go to Great Britain DOW. I'd rather go to the chart that looks exactly like the FTSE, but it's made up of, it's called the Dow UK Stock Index. Dow Jones UK Stock Index. So it's not Dow, it's DJ. Oh, it says Dow. No, I'm going to call it, it's called the DJ. DJ. And that, edit, that looks exactly like the FTSE. And this FTSE doesn't look very good. So now I'm looking at the situation that says, because we are looking at key indices that are really not acting very well within what I would call it Elliott wave 4. It's still 4. I'm talking about what happens if in the next month or so it goes to a new all-time, the Dow goes to new all-time high. That creates the potential for a brand new buy mode in the monthly charts of the Dow, and that essentially says to me that Elliott wave 5 is underway. We could get a very sharp pullback because you still get waves within it, but that doesn't mean to say that you're going to break the 15,370 Dow low, and that's really critical no matter what happens. So when I'm looking at this, I'm saying money flows where it's treated best. It's been treated worst in all the commodities. I think there's an opportunity now for a counter trend rally because money's going to go somewhere. It's not going to just sit on the side. Oh, and a fantastic Eddie sent me this article last night. Let me just tell you about this. We're trying to make heads or tails of it. Oh, let me stretch over and get it right there. Okay, that's the reason why I love to have an untidy desk, because I've got all my notes. Everything's there. I just know exactly where it is, but it might not look very neat. China and Japan continue to liquidate holdings. What it means. November marked a record month for China in terms of the pace of its liquidation of foreign got cut off. China reported on Monday, December the 7th, that foreign exchange reserves, which mostly consist of bonds, U.S. bonds, 87 billion in, oh man, I lost part of that. I want to read it properly. I don't want, all right, during the break, I'll try to get it back. But what it's basically saying is that between right behind the largest U.S. Treasury holder is the second largest, Japan. Japan's Ministry of Finance, something or other, they've been selling 1.244 trillion last month for a drop of 1%. So it's dwindled by 6%. China has dwindled as well. I think it was 14%. So all of a sudden, you've got these countries selling off. They're selling our bonds. I think something's happening here that's different to any other time. And that's the reason why there's just a chance that for the safety haven, all of a sudden, instead of bonds being the safety haven, you might find that gold just becomes, in a shorter term, I don't know if I can even call it safety haven, but just a moment of attraction. Let's put it that way. I might be wrong because I'm still a bear on the commodities. But this is a counter-trend move while the dollar's taking a breather. Question on the VIX. VIX is at 18.11. Yesterday, it closed quite high. It was in the 17s. That's high. That means we've started to incrementally move up. And right now, it's at 18.12, up 52 cents, having gone and hit that 9-period moving average exactly at 16.64. These are all the things that I'll be talking about. Probably I'll talk about some of it tonight, but tomorrow I'm going to spend a lot of time in terms of the trades for next year and what we could be looking at. So in the meantime, you've got the VIX index. So that tomorrow night, what I'm talking about, if you go to the front page of TFNN, this is what I'm talking about right here. Besides the Salvation Army Tiger dollars, don't forget, this is a win-win-win situation. Opening call subscribers, Elliott Wave 5 and the Chapman Wave. I wanted to discuss the relationship there and that both of them now in the consolidation phase. Elliott Wave 4 hasn't made the 5 yet. I want to discuss that whole thing tonight. And tomorrow, a big deal, make a big deal of it. And tomorrow, of course, with potential trades that we're looking at over the next 2-3 weeks. Now, so that's tomorrow night, December the 10th at 6 p.m. Thursday. For all subscribers, I'm opening call. Sign up for a free trial. This is really important. If you have a portfolio, you kind of want to know what's going on. You want to know what to be doing and have some kind of protection there. So VIX now is at 1821. Bam. A real quick move there. So, I've covered a bunch. And now I'm at that one question that I had that I wanted to deal with, and I wrote it down. Oh, the euro is what I've left out. EUR-USD. For the first time, I can actually talk about the euro and say, hey, leg B. Yes, there it is, leg B. What I wanted to say, it's a question of whether it's a B or this is the brand new A that we'd be waiting for. Why? Because in the Chapman wave, the low cannot be the high except at an instant restart. Wow, the eyes glaze over. What does that mean? What that means is that when you're coming down and then you make a low and that bar suddenly has a big spike to the upside, you can't call that A if it made a new low because you haven't made a trough. You can only start your count after a trough is made. So that bar there, say now you can start thinking of it of the next move up to make leg A. And now you've got leg A. Theoretically, I would like to call this an A and this a B because it was such a spectacular move to the upside. I'm going to be official. This is A. All right? That doesn't guarantee that you're going to go A, B, C, D, but it does say that if the stochastic at 78% jumps to 80% or more, with that MACD expanding, this is a key moment. And that's the reason why I wanted to have some gold stocks, and I wanted to have some gold, one of the ETFs pertaining to gold for my subscribers. Could be totally wrong. Could be just another blip. I don't think so. I think there's an inflection point that's occurred right now, and that inflection point is telling us that there's a change in thinking, and we have to move with the change of thinking. I'll be right back. Basil Chapman, Dow's down 1.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. Big question here. You mentioned just now that we are in a consolidation phase on Elliott wave and Chapman wave. I thought I heard you mention recently that you thought we were in a coda, so shouldn't that be Elliott wave 5, the very strong upward thrust phase? Could you please clarify whether we are in the coda or rather just digesting now? Thanks, Basil. Different time frames we're talking about. Until we get a new all-time high, I have to consider that it's a consolidation phase before another big move to the upside. There could be, we've seen it over and over again, that when enough stocks start to weaken in a particular sector, somehow or other there are other sectors that take the reins. Well, right now we don't know which sectors are going to take the reins because a lot more. The semiconductors that have been holding well, I don't know if they can hold up under this kind of pressure, even though I've got Intel right now. Even Intel's up 8 cents. It's holding quite nicely. So you understand what I'm talking about. What I'm talking about is I'm a technician. So it means that I have to reach a certain point. In Dow, it's 18,352. Don't have to close there. You just have to get there. The moment that happens, in my work, I believe that I'll be looking at Elliott wave 5 rather than 4. That's a big trend change. That doesn't mean to say you can't pull back 2,000 points. or even 3,000 points. But that 15,375 level, I'm going to make it real clear. INDU. That 15,370 low of August the 24th, if that's taken out, I don't care what the reasons or whatever it is, that'll be a big negative and suggest we're going to go down even further and even longer. My thinking here is that enough stocks like UTX and Triple M have already had a pretty decent consolidation. UTX, look, there it is. And that you could come down further, but a chunk of their big move has been done. Do they restart for another big move up? What on earth could get the market to have another, basically a bull market of 4 more peaks to the upside? I don't know. That's why I need very much to see some kind of consolidation. Look at the XLF. The XLF, right on its 200 period moving average support, making that arch formation. Maybe today's Wednesday. Friday, if I have a chance, I'll spend more time and I'll talk about these patterns within the Chapman wave, the right shoulder failure, the arch formation, the lowercase h that goes to an M, etc. And why at 89%, the stochastic is still good on the weekly XLF and the MACD is still good. And that makes the next 2 points, up or down, I'd even say 1.5 points in the XLF, really important intermediate term. So I hope I'm making myself clear. Okay, now the other thing that we're looking at is within the context of all this, how do you put it all together? Well, I think very selectively, I'd lighten up on my long positions on pure stocks. I don't see why you'd have to get carried away. You can keep what you have or tighten the stops, make it easy. But on the downside, I'm just seeing more and more short positions showing up, and we're taking them, and we'll see what happens there. So I hope to see some of you tonight at the Investors Business Daily meetup, where I'm the guest speaker. I'm starting at 7 o'clock. And but tomorrow night is probably, I thought that the February, March, that period when I did my webinar was really important, when I was showing the chart patterns that I was expecting in the Dow. They kind of came to fruition. We got that very sharp down move in August, down to the Dow 370 level. Now, this is very critical. We're at a very critical point. You can't just keep chopping around. At some point, you're going to break either to the 18,000s in the Dow for a potential move to the 18,351 high, or you're going to take it out. You're going to break 17,200, and then bam, 17,000 is a critical level. You start going back to the 16,900s. That's a change of scenario. So this is a critical period. So keep it in mind. Look at the VIX. VIX running is saying there's a lot of selling pressure. I'll be back tomorrow. Hope to see some of you tonight. I hope to see all of you tomorrow. Have a
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.